We will start in one moment. Good morning, Living Financially Smarter. We will start in one moment.
Can we see how many are on?
Okay, good morning, Living Financially Smarter. I'm Rifka Lebowitz, financial consultant and founder of Living Financially Smarter, helping people live well in Israel. This morning, we're going to talk about pensions. First of all, thank you, Danny Newman, co-admin on the group, for joining us. Danny, please introduce yourself.
Hi everyone. So my name is Danny Newman. A lot of you may be familiar with me and my comments on the group, together with Rifka and Binyamin, the other administrator, where we answer questions. As you can probably hear, similar to Rifka and Binyamin as well, originally from the UK, made Aliyah in the late 1990s, married 4 kids, live in Bet Shemesh, and work for Golfers Insurance. I'm fully licensed in all aspects of insurance here, be it home, car, and other general insurance, and also pensions, life insurance, health insurance, and various other aspects of the world of insurance, investments, and pension savings.
Excellent. So before we delve into pensions and explain pensions to people, which I see from my work with clients, that nobody seems to understand their Israeli pension, or very few people seem to understand their Israeli pension, I just want to explain that, first of all, this is not investment advice. This is not pension advice. We are just explaining some facts so that you can understand your pension better. Secondly, this doesn't cover everything. This is a basic talk to understand. There's obviously a lot more information out there, but from this talk, you'll get the beginning, you'll understand, you'll be able to look at those statements that look Chinese or whatever and understand what's going on. They're obviously very complex situations and very simple situations. We'll explain the basics here. So Danny, why don't you delve in and explain a little bit about what pensions are, what age maybe people retire in Israel, and let's get started.
Okay, so what I do, I actually prepared a presentation. So I'm just going to bear with me 1 second as I go to share screen, and hopefully this will work. So you'll let me know if you can see the screen. Okay. Can you see the screen? I don't know if it's if anyone can see the screen, because according to Facebook, I'm not sure it is showing on Facebook. So okay. So here we are. 1 second. It's just a little bit of a time lag. Okay, so I'll just wait 1 second as it loads. Okay, so here we go. So beginner's guide to pensions. So firstly, what is retirement age in Israel? So there is no absolute age where people retire. It can depend on different areas of work. There are some places of work there where there is mandatory retirement age. Shimon Peres, for example, he was working until he was about 94 years old. So it really depends. Some people are self-employed and they enjoy work. Ultimately, when it comes to pensions, you can retire at pretty much any age after the age of 60. But as far as mandatory retirement age in Israel, if you're in a place of work which has that, so it depends. Women depends on when you were born, and this is taken from Ynet. Actually, very recently, a few days ago, on the 21st of October, they published an article where they increased the pension age for women for people born after 1970 to age 65. For men, it's been since anyone born after 1942, it's remained static for a long time at age 67. That is the retirement age. Now, I guess we'll go into what is pension. So if I was to, let's say, draw out the average person's life in a graph. So we have the blue is the income. So hopefully income will go up as one gets older and the income levels improve. When one stops working, so I've put, let's say 64, 67, it could be any age here, it goes down depending, okay, 64 if you were born before 1972 if you're a woman. If you're born after 1970 for a woman, it would be 65. It goes down to what's called state pension, Kitzbat Zikna. It is a uniform amount once people have maximum number of years that they have worked for. Again, this isn't necessarily the time or area to go into all the different permutations, but let's call it somewhere between 1,500 and 2,500 shekel a month, depending on one's family status, how many years they've worked. So one's income when they stop working will go down. What is a pension? So over one's life of working, one is in essence saving money, what I call an LTF, a long-term fund. And I'm using purposely a generic term. I'm not going into the actual specific names of different types of pension plans, but just as far as the concept's concerned. One saves money, and then when one hits retirement, we open the tap on the fund and we fill up as much as we can. That, in essence, is the fund. I don't know if you've got anything you'd like to add there, Rifka, or any other questions you would like to ask on that, or is
okay.
that, or we can move on.
So this fund that people have, the idea is that I see at least that people don't understand it and they don't know how much they need in it and they don't really pay attention to it. And that can make a really big difference when they go to retire, how much they have in that fund, how much they have every month, but we'll get to all of that. First of all, if you can show, if someone's employed and or self-employed, they should be doing it. But if someone's employed, where do they see that on their salary slip? How does it work? How do people know, if they're putting in enough, not putting in enough? Maybe you could show us that.
Okay, so I actually prepared an example of a pay slip whereby people can actually double check against their statements. And later on in the presentation, we'll look at different types of pension statements so you can see how it actually registers on that. But to understand the pay slip. So this is an example of a pay slip. And I've looked at a very basic one of someone, let's say, earning 12,000 shekel a month, no extras. And, so we'll see here in this area A is what we know is schar brutto, the gross salary. Then we have on this side, again, each payslip may be laid out slightly differently, but you'll see the word nikuim, deductions. So this you'll have here, income tax, the top you'll see mas haknasa, bituach laumi, mas briut. So anyone's deductions to the taxes will appear there. And then you'll see employee contributions to social benefits. In this instance, on this you'll see pension, pensia, which we'll be talking about obviously over the next quarter of an hour, half an hour or so. And this person also has keren hishtamut. Usually, in most cases, the percentage deducted is usually 6% for pension and 2.5% for keren hishtamut. So you can see if the salary is 12,000 shekel, 6% of 12,000 shekel is 720 shekel. So these are all the deductions here. Paid, so the pension contribution is paid by the employer on behalf of the employee. They've in essence reduced it, deducted it from the gross salary and should be paying it on behalf of the employee. Then we see here in this section will be in essence it's an equation. I've called it C. So we do A, the gross salary minus all B, all the deductions. You get the net salary, schar netto. So it's a gross salary less deduction. You'll see netto l'tashlum, and that is what the individual should see in their bank account having been paid that month's salary. There's another section where you'll see hafkadot ma'asik l'kupat gemel. These are all the employer's contributions, which is over and above, on top of A. So usually for pension, for tagmulim, it's usually 6.5%. So we'll see 780 shekel here is being paid into pension. So that's 6.5% of 12,000. And then you have severance pay pitsum. Again, I'm not going to go too much into what pitsum is, but it's usually 8.33%, which is what it is here. Or the legal minimum is 6%. And that will be determined here. And in this case, this person also has Karen Ishtamut, again, not for this this topic, but it's usually 7.5%. That, in essence, is the pay slip where people can see exactly how it works. I'll move straight into the contributions so you can see how it works. Just here's a summary. Here's a summary of the for a sachir, an employed salaried worker. Usually they will have approximately 1/5 of their salary. So it's either 18.5 if you add on 6, 6.5 and 6%, or 20.83 if you add on 6, 6.5 and 8.33%. So approximately 1/5 of a sachir, a salaried worker's salary, is going towards their pension plan. There are differences for certain people. An employee in some instances may want to increase it to 7%. Some employers may pay a little bit more. Again, there are certain different permutations, but that's beyond the scope of this basic overview. And then you've got a whole group of people called atzmaim. And here is a summary of the main points, which people want to play back afterwards to watch this as well. But in essence, since 2017, there is a legal minimum requirement for atzmaim, or for most atzmaim, to be paying into a pension, and that it's a factor of their annual income, and that annual income is dependent on what their earnings were in the tax year. And the tax year in Israel runs from 1st of January through to 31st of December. And each atzma'i will need to make sure that, to be compliant, they've made their contributions before the end of the tax year. So you shouldn't leave it to the last minute, to the end of December, because, they may not have enough cash to be able to, or cash flow to pay into it. And also it's a very busy time in the world of insurance and pensions, whereby, if you want to sit down and have quality time with your own agent to go through what you should be putting in, or your accountant as well. So, it can be quite stressful to try and get everything through at that time. So the recommendation, especially now as we're approaching the end of October, is now's the time for anyone here who's an atzma'i to liaise and to consult with one's accountant and pension agent to make sure that you're on track for everything that needs to be done. That's,
if I can interrupt, yes. I always recommend, like, as a financially smarter tip, that atzmaim, that self-employed people, deposit on a monthly basis. Don't wait till the end of the year. Forget the fact that the agents are busy, and then I would tell people, I always remind people November time on the group, deposit in your Karen Hishtamut, deposit in your pension. But besides from that, it's a much easier way to manage your business, just knowing, okay, this amount is going to my pension every month. And then towards the end of the year, if you have more money you want to deposit, you can always top it up.
Correct.
But it just makes it easier to manage a business if it's paid out every single month.
Correct. So the next question, which a lot of people ask, is, well, how do I actually get the pension money? And there are very old pensions which one used to be able to take as a lump sum, but for many years now, and probably the majority of people watching this now, and definitely recent olim as well, you can only really receive your pension as a monthly annuity. And the way they do that is that they will, if we look at this lump sum here in this fund, when you get here, they will look at the individual and they use a divisor. It's and the same works for all different funds. So before I go into how it works, I guess we should really look first at the different types of plans. A lot of people say, well, does it make a difference if I've got a Bituach Malim or if a Karen Pensa or Kupat Gema, how I get the money? The answer is that it all works the same. However, within each fund, there are differences as far as what may be included in it. But ultimately, most people don't necessarily know what they have. Quite often, someone will say, oh, I've got a Kupat Gemel, where they actually may have a Bituach Malim, or they might say, I've got a Bituach Manalim, where they've actually got a Karen Pensa. There's often a lot of confusion there. But just to give the main points, what is a Bituach Malim? Again, it's primarily for pension savings. It can include life insurance into in the policy itself, so that should someone die prior to receiving the pension, that there's extra life insurance paid out to the family or other beneficiaries. It can also include job-specific disability cover. So, for example, if I was, let's say, a surgeon and I've lost the use of my hands, but but I could still work as, let's say, a GP, but I want to cover my specific job. Within the Bituach Menalim, you can have an extra cover built into it, which will cover up to 75% of your income within that. That's a Bituach Menalim. Within Keren Pensia, it works slightly differently. You have, survivor's pension is built in. Obviously, pension savings is the primary thing, but as opposed to beneficiaries in the Bituach Menalim, here it's survivor's pension. That if someone were to die young, so there will be a certain percentage that will go to their surviving spouse for the rest of their life. And an additional amount will go to children under the age of 21. Again, I'm not going to go too much into the actual details because this is trying to get a basic understanding. Also usually built into Keren Pensia is also an aspect of disability, but it is not job specific. So it's not as comprehensive as if one has disability within the Bituach Menalim. So that, if we said that surgeon, who had a Bituach Menalim, so if he can't use his fingers or his hands, he can't, perform surgery, so he would have cover. However, if within the Keren Pensia, if he can still work as a doctor, he may not be eligible for anything. It's a much lower. However, if, let's say, Christopher Reeve, who played Superman in the 70s and 80s, who fell off a horse in an accident and became quadriplegic, so in that instance, this would pay out because in this instance, the person will not be able to work at all, really. There are options, however, where one can fill in the gap and privately, as an individual, take out a private policy to fill in the gaps to cover any instance which is lacking in a Keren Pensia. And Keren Pensia also has an upper limit of what can be paid into the pension. So usually it's about someone earning over 21,000 shekel. The contributions will be above the figure here, and obviously it changes each year. And they may have to open up an additional fund for any surplus income. The final one is a Kupat Gemel, and here it's pure pension savings, and there are no insurances there whatsoever. So those are the main differences. It may be worthwhile. I'm seeing, Rifka, there are a few questions that have come in.
Yeah.
So I don't know if I've addressed that. So maybe we'll just take a quick second just to maybe have a look at some of these questions.
And then I have a comment about the Bituach Menalim.
Yes.
A lot of times people are asking, is it worth having Bituach Menalim? I knew there was a time where, because the coefficient or whatever it's called was very good for Bituach Menalim, people recommended having it, and more recently it's not as effective and it's just a more expensive product. Could you maybe explain, or do you want to do that when we get to the fees?
So I'll explain now. Actually, that was the next few slides. Is actually about the coefficient. There are many factors. If I was to sum up, there are three main factors that are very important within the pension, other than making sure you've chosen the correct track which meets your family status and salary, as far as whether or not you just want savings, whether it's important to have survivor's pension for a spouse or young children, if the unforeseen were to hopefully hypothetically occur, or if someone wants disability incomes. That's important. But the main things important things, if I were to go through them, one is how one gets it, and we'll just look in a second about the coefficient, fees, which we'll look at very shortly, and also the track and the level of return, the rate of return and the yield and the interest rates that you can potentially get, because we'll soon see, and I'll explain a bit shortly about compound interest, whereby even 1 or 2% can make a massive difference in future returns. Everyone speaks about fees, and they're very important, but I believe that maybe too much of a focus, rightly so, people concentrate on fees, but people neglect other aspects that in my mind can be as important, in some instances even more important than just simply the fees. Now, as you mentioned, there are some old Bituchei Menalim. Let me go to the next slide to explain first how it works, and then we'll go to the old Bituchei Menalim. So let's say, for simply of mathematics, someone has saved 1 million shekel in their pension fund. When one gets to retirement, they will not receive it, as I mentioned, as a lump sum these days. Any fund since 2008, or any Keren Pensia, Kupat Gemel, these days will only be received as a monthly pension. How does one calculate it? It will be divided by a mathematical number, a coefficient, based on actuarial tables, and mortality tables. In Hebrew, it's called a makadem kitzba, or makadem hamara. But it's a divisor where they will calculate, so for example, how long do we think Rivka's going to live post-retirement? How long do we think Danny's going to live post-retirement? How long do we think Chaim Cohen, John Smith, Sarah Levy, or Tracy Jones is going to live post-retirement age? Now, what they would do, they won't necessarily look at how healthy the individual is, but let's say someone who's born in 1980. So if they're going to retire at age 65, so we'll fast forward to the year 2045, they will look at the class of 1980 and what they perceive and what they believe based on their calculations the life expectancy will be. So, for example, if they think that that person is going to live 200 months on average after retirement, so if we take 200 months, divide that by 12, so we get to 16 years and 8 months. So if the person's retiring at 65 and they think on average they'll live to 81 and 8 months, so they will divide it by that 200 and they will get 5,000 shekel for the rest of their life. It makes no difference if the person will live till 72, 82, 92, 102, 120 in a day. They will get 5,000 shekel for the rest of their life. I'm not going to go in this lecture because otherwise it's make it too complex, because there are differences in different pension plans as far as what happens if I was to die just after retirement or just before retirement. What happens to all the money that I've saved? There are different ways, and again, beyond this lecture, but or this discussion. But again, each person can speak individually with their own agent or a licensed professional to understand more about their own policy. But again, that's 200 months. If, let's say, the predictions are that someone's going to live longer, 250 months, that's 20 years and 10 months. So the same person retiring at 65, and they are going to live on average, based on the mortality tables and the life expectancy tables, to, let's say, 85 years and 10 months. So they will get 4,000 shekels for the rest of their life. In other words, the longer people are living on average, the higher the coefficient is, the less one gets in retirement. That is a very brief explanation of how one gets the money. The other next important thing which I spoke about is interest rates, and this is compound interest. What people don't realize is that other than fees, which we'll speak about, interest rates are very, very important. Now, most pension plans are quoting their simulations based on 4%. What I've done here, this graph shows what compound interest is and how we can try to get more than 1 million shekel by both investing for a longer period of time and also to try and gain a greater rate of return by choosing a more appropriate track based on one's age. So here I've taken, on the left-hand side, we'll see the number of years that someone has deposited into their pension. So we're looking at 10 years, 20 years, 30 years, and 40 years. And let's say they're putting in 1,000 shekel each month. So if they're putting in 1,000 shekel each month over 1 year, 1,000 times 12 months is 12,000 shekel. Times 10 years is 120,000 shekel. So we see the nominal amount is how much they've put in from their own money into the fund over 10 years. Over 20, 30, and 40, you see it's 240, 360, and 480,000 shekel into the fund. Now, on the regular returns, and we'll soon see, I'll also show some example returns of different types of funds. So 4% historically, although obviously past performance doesn't guarantee future ones, and I don't have that crystal ball to see what will be in the future. But historically, 4% has been very, very doable. In fact, some of the higher percentages have also been doable as well. We'll see if it grows at 4% per annum, the 120 over 10 years goes to 147. But if we look at the jump from 30 to 40 years, it almost doubles itself again. And then if we look at adding 1%, you've just got 5% over 30 years. The jump, you've basically got another 138,000 shekel or so into your pension fund. And over 40 years, almost 500,000 extra. You jump to 6% or even 8%, you just see the differential is tremendous. So often choosing the right investment track and level of exposure to the stock market is very, very important too. A lot of people often make the mistake as well, Rifka, they say, well, I'm young now, let me wait till I'm closer, then I'll put more money in. It's like the Aesop's fable, the hare and the tortoise. The hare can run much faster than the tortoise and sprints off, decides to relax and say, I'll just wait to the end and I'll just run at the end. And the tortoise, who's slowly plodding along, actually gets there first because the hare has fallen asleep. So here I ran a simulation, to look at someone who says, in the last 10 years, I will deposit 4,000 shekels. So he's also putting, and someone's putting over 40 as 1,000. So both these people have actually put in 480,000. But if you look at 4%, there's more than double for the person who plodded along slowly. But if you expand it out to 5, 6, or 8%, the gap gets wider and wider and wider, which a lot of people don't understand, that sometimes you don't need to stretch yourself at the beginning. So if someone's starting off, it's so important. This is one of the beauties of the 50 shekel or 100 shekel government saving things via the Bituch Leumi for the children, which for the last few years people are getting. It can be a great head start, and if people are wise enough when they get to 21 and could take it out, if they keep it in and they use that to invest further, they could in theory have investments for 50, 60 years and could have tremendous amounts of money. So starting young, not even with a huge amount, can be far more beneficial than trying to catch up towards the end. So that's I guess I've spoken for a lot now, and I've got other things to show different examples of of different types of tracks. But I guess unless you've got any questions you like to ask at this case, or if not, I'll just carry on.
So I think most of the questions that have been asked till now are about Tzmaim and whatever. We'll address them at the end, but we will get to them. I think a table like this and the table you just showed us, if you could go back one slide, is absolutely incredible. When people look and they say, okay, you know what, I've got 20 years until I retire, I'll put in 1,000 shekel a month, will it make a difference? And the bigger difference is you see, if it's 4%, they'll have 366,000. So obviously nobody knows what's going to happen. But if it does 8%, if they're in something a little riskier, which obviously could also not do as well, they would have 589,000. That difference is tremendous. And that difference comes mostly from people just being aware of what they have and choosing something when they have long term that suits their needs. And that to me is tremendous, because either way they're saving. So anyone listening to this who's like, I don't know what I'm saving in, take a look. Danny's about to show us how we can compare funds, how we know how our fund's doing versus other funds. So you'll be able to take a look and see historically, at least, obviously nobody will predict the future, how your fund has done, and sort of know if you're likely to be the one getting 366 or 589. And the difference is just the track. It's not that you have to do much more other than choose the track. So Danny, over to you.
Okay, so I'll tell you what I'm going to do. Let's look at some different things. So here is a list, and again, maybe we'll put it also into the chat afterwards. But again, this will be available for people to play it. There are 3 main government sites. There are a lot of other sites and companies who you can go on to find similar things, but it's kind of a way of them getting people's details. I'm a firm believer of looking at strictly the government websites, where it's not one company showing how they've done better or not. And there are 3 sites: Gemonet, Pensionet, and Bituachnet. And I've put the websites here. And on Gemonet, you can look up historical returns of Kupat Gemel, Keren Hishtamut, Kupat Gemel Hashka'a, which is savings funds, not necessarily for Americans, or South Canadians or North Mexicans, I like to sometimes call them. Kupat Gemel Chisachon Le'Yeled. So those who have the Bituch Leumi savings funds through the Kupat Gemel option, not through the bank option, can also check the returns there as well. There's a site called Pensionet where you can look into historic and current returns of Kronot Pensia. And you've got Bituachnet, which you can include also Bituchei Menalim. So what I've done, because it's, I looked at one of them, let's take the first one, so Gemonet. So you see, I've done a few screenshots. So when one looks at Gemonet, you come to a page and you see all these are .cma.gov.il, showing that they're not private companies, these are government sites. And you click on Knisa L'Marechet. And then you get a whole list, it goes down and lists all the different funds. And what you can do, you move in. So let's say, for example, I'm moving Keren Hishtamut to move it all. What I've done, I've moved Keren Hishtamut. You put it into this box and you press Hatzeg Doch. I usually do initially the 12-month period, but you can also look at different years here. So, for example, when you do that, what you see I took one old insurance company, not that I'm recommending or not recommending them, but it's just an insurance company which is one of the oldest or the oldest and has got a lot of historical returns. And we can see 3 different tracks. We see what most people are in, not because they necessarily chose to, but it's the default option, Clari. And we see in the period of the last 12 months, so the report is from October 2020 to September 2021. The October figures aren't yet out yet. In those 12 months, the general fund made 17.2% on average. Well, in the last 12 months. Then we see the 3-year average, what the average return was for the last 3 years and the last 5 years. Because I'm sure most people here have heard of Corona. It's been in the news a few times. So it adversely impacted a lot of the markets a year or so ago. And we're currently seeing a tremendous rebound. So I wouldn't necessarily look at the last 12 months as being the standard, the average. I look at 5 years and beyond to be given average. But the mixed default option has been returning 6.64%. There's a lower risk, and I'll explain shortly in the next few slides what high, low, and mid risk means. Government bonds has only made 1.18% in the last 12 months and averaging over 5 years, 2.13%. And then you've got their more aggressive track, which has made over 30% in the last 12 months, but averaging 11% in those 5 years. And at the bottom of that page, once you've sorted it, you then see of all the Chronotishtamut in the entire in the whole of Israel, they've averaged 14.5%, and over the last 5 years, 6.2%. But if we look at all the different funds here, we don't yet have data for Kupat Gemashkal, the children's savings, because they're relatively new funds, only be running for 3 or 4 years, so we haven't yet got this data. But we're seeing when we looked at the 4% originally, we can see that's definitely historically been doable. Again, what will be in the future? Olam Gadol. I have no idea what will be in the future, but historically that's been doable. Now, just to look at the different funds, what I'm doing to explain the difference of risk between medium, low risk, and high risk. So here is Fund 579. As you see, each fund has a number through the Otsar, through the Treasury. And this is the mid-range. And I've taken a snapshot, and everything's clickable. When you click on the fund, it shows you all different data. But the 2 main things, the bottom one here, or the 4th row, where it's the bottom red arrow, is in the last 11 years or so, from 2009, 2020, what their exposure was to the stock market. So you'll see it varies. It's a managed fund, and they've been averaging about 1/3 in the stock market. The second one is government bonds, and they mixed it in other things as well. You've got corporate bonds. At the bottom, you've got other investments, could be property. You've got loans here at 16.2%. Various other things, but it's a mixed thing. But they tend to be no more approximately than about 1/3 or so into the stock market. That's a mid-range. We look at the aggressive one, which is a greater exposure. We see pretty much 0 in the stock market. Or the last couple of years during Corona, they got nervous from previous crashes and they put a bit into the government bonds. But usually it's 80-90% most of the time in the stock market. So it's a much greater exposure to the stock market. And then we look at the what I call the conservative fund. It's almost predominantly in government bonds, and you'll see 0 in the stock market. Now, how does that relate? What I did, I compared the 3 funds. I thought, let's go back for the last, obviously we don't have all the data for 2021, but let's look at the crash of, going back to 2005, look at the crash of 2008. The subprime, which a lot of people here will be familiar with. So we look at the mid one, they lost 9.38%. The aggressive fund lost a humongous 51%, 50.99. But let's look at the recovery, 25, which is their best return, and the best return here is 71%. There's another crash here, and again, past performance doesn't guarantee future. Historically, there's usually recoveries, but we're seeing a potential for bigger losses and a potential for bigger gains in the more aggressive or the greater exposure to the stock market than the mixed one. Ironically, if we look at the government bond, 2008 was the best year. Somehow the Israeli economy managed to buck the worldwide trends of the subprime market, and a load of people were investing in the Israeli government and Israeli companies, and they actually had their best return ever. Yet they still can lose, as we saw in 2018. The advice usually is, and again, I guess Rifka, you're probably may want to pitch in on this as well, is that when one is young and has many years, and maybe I'll just go to the next slide as well in a second, is that when one's got less money in there and a greater period of time to have that bounce back ability, it's worthwhile being more aggressive. But if, let's say, someone is 62 years old and they've got a few years left to retirement, and they've got, let's say, 1 million shekel, and they should not really be in an aggressive fund at that stage of life, because if they have another 2008, they won't have enough time to recover. But what I did, I took, and then I'll hand to you to give your input as well, Rivka, is what I did, I looked at the last 12 months to compare. I took from the last 6 years, 2015 to 2021, the last 11 years and last 16 years. So we see the difference between the top is the mid one. So the last 12 months, okay, it's been warped by, we're in the middle of a recovery at the moment. But if we look at the last 6 years, in total, the mid-range has returned 42.66%, the conservative one 13.55%, and 77.86% is the stock one. If we go to 2010, we see a much greater return. And if we were to go back even to 2005, so we're now going to incorporate the major crash of 2008 in there as well, you will still see over a longer period of time the benefit for younger people not panicking and being in the aggressive fund, because you have just over 200% return over that period of time, as opposed to 98 in the very conservative and 167. I don't know if you've got anything you'd like to comment on this, Rivka.
Yeah, I mean, I guess when someone's young and they see 50% drop in their funds, it's like, oh my goodness, that's terrible. But when you're able to look over it over time and you understand that, yes, this fund will still likely outperform any of the others, and it's not worth pulling out at that point, then people can stay in these higher risk funds. However, when you go to retire, and tell me if I'm wrong at this, and you have 2 million shekel, and let's just say the makadem at the time, the coefficient or whatever you called it, is 200, so you're expecting 5,000 shekel per million. You have 2 million in your fund drops by 50%. For your retirement, you're going to have 1,000 a month, and you don't have time to wait for it to recover. And therefore, as people get older, they should go to their advisor, their licensed pension advisor, and check if they should be reducing risk, which as a general piece of advice, they should be, so that if there is some major crash the year before they go to retire, they're not going down 50%. And or I have heard, I mean, you could tell me if this is true, but I have heard that people, when there was some sort of crash, even if it was only the 20% and not 50%, before they retired, they actually kept working for a few more years, so the pension fund would go back up.
Yeah, so that happens.
Yeah, right. Okay, I think we're up to management fees. I know it's a hot question, a hot topic. I think what you proved here, though, Danny, is that much more important than management fees, which we're going to get into, and obviously
they're still very important, the fees, but yeah, they're
definitely very important. But much more important is what track you're in, because that difference could be hundreds of thousands of shekels and potentially millions of shekels, depending how many years you've invested for and how much you've put in. So over to you.
Okay, so we'll go to the fees. So looking at fees, so there are two different types of fees. There's what's called from the deposit, either premium hafkada. So for example, if an LFSII is putting in 1,000 shekel a month, or if, let's say, someone's earning 10,000 shekel a month and they've got 2,000 shekel going into their pension, so a certain percentage will be taken out by the company, either the investment house or the insurance company managing the pension, will be taken out. That's A. And you also have a second fee from the accumulation, from Sfira, from the Chisachon. Now, there are, again, going back to the three different funds, I'm looking at funds today. There are older funds with B'tuchei with much higher things, but if we're looking at funds today, the maximum fee that they're allowed to take from the deposit is up to 4%, and from the accumulation is 1.05. If I was to look at a cross-section of the hundreds and thousands of pensions that I see, every single year, the most common average fees are around 3% and 0.5%. You will see older B'tuchei Menalim with much higher fees, and in some instances they're actually better. Why? Because before the 31st of December 2012, the coefficient on a Bituch Menalim, unlike nowadays where we will only know that divisor when you hit retirement age. So if you've got an old Karen Pensive from 20 years ago, again, we will only know the divisor, that coefficient, that Mekadem, when you yourself hit retirement age. On a Bituch Menalim from before the 31st of December 2012, the coefficient was fixed at the time you went into the policy. Now, if someone has got a Bituch Menalim from, let's say, 2012 or 2011 with a fixed coefficient and on a fee which will most likely be higher than this 3.5 or even higher than 4 and 1.05, it may or may not be beneficial having that, because the fixed coefficient may not be as attractive as someone who's, let's say, got a 25-year-old Bituch Menalim with a much lower coefficient. So some instances, it's actually far better having a much higher fee on a very old Bituch Menalim, because the divisor will be much less. Just to give you a simple thing. If, let's say, someone saved 900,000 and someone saved 1,100,000, so there's a 200,000 shekel difference. If the person on 1,100,000 has a divisor of 220, they will get 5,000 shekel for the rest of their life. If the person who's got 900,000 shekel has a fixed old coefficient of, let's say, 166 months, which is what they were in the late 90s and very early 2000s, then they will have a future retirement and pension of 5,421 shekel. They're actually 421 shekel better off than someone with 200,000 shekel more in their fund today. So someone who has a very old Bituch Menalim, please do not make any changes without consulting a licensed professional to run the appropriate simulations, just to make sure, because once you leave one of these very old funds, which the insurance companies know they are often better for people, you won't be able to go back into it. The Karen Pensia, the maximum fees, there's actually an error here. That should be 6% and 0.5%. So what I'll do, I will amend it and maybe upload it afterwards. That should be 6% and 0.5%. The common average fees today are 1.5% to 3% and 0.15% to 0.3%. On Kupat Gemel, the maximum fees are similar to Bituch Menalim, and the common average fees, often we can get 0 on A and between 0.6 and 0.8 on B. Obviously, people can get higher if they're, let's say, much smaller or much higher, and they're a default thing. I'm not going to go into that, but I will amend the Karen Pensia should be 6% and 0.5% here. But again, if you're paying the maximum fees, definitely you want to make changes. Let's look how to translate it. And what I've done here, just to give people examples how to read the annual statements, and I've looked at different products, and then we'll open up to questions, Rifka. I'm looking, a lot of people say, well, how do I know what's gone in, what my fees are, what the returns, what track am I in? So I'm going to take the next 2-3 minutes before we end the presentation, just to go through different types of plans. So this is one from Harel. This is an annual statement. You will usually get the annual statements around the end of March, beginning of April each year, and it will have all the details from the previous tax years. This is someone who opened up a plan as an atzma'i. You'll see there's only Tagmane Amit. This is a self-employed person. Here, 22 in the year they had 22,000 shekel is what they're left with at the end. Sorry, let me go back. Here we see the beginning of the year they had nothing. They put in during that year 20,000 shekel. It made a profit of 1,800, and the management fees on this fund were 126 shekel. The closing balance is 22,270. So here is just a summary of what they're expected. Again, this is a Kupat Gemel. So this is one with no insurances, just pure savings. And as we look at the fees, we see 0 is being taken from the deposit, but here it's 0.74. And they even tell you in a lot of these things what the average return is. So they're even showing you this is something which came into place a few years ago in regulation, because a lot of people don't notice. Some people actually leave them still in the envelopes, but a lot of people don't actually notice what the fees are. So they're now mandated to tell you where to look out, check the amounts are correct. So here it's telling you what the average on this track is. So the average is actually 0.25, but this person has no fee on the money going in, and they have 0.74 on the accumulation. And we see their investment track, they're in an age-related track for people aged 50 and below. And in 2019, the annual return was 12.66%. And we see how much they put in. We can see they obviously put in right at the end of 2018 what the legal minimum was to put in. And we see what's gone in each month. That's one way to see. So you can see what the fees are, what went in, and what your closing balance is, and what the return is, and the in-track. And these are things just to look into. And you'll also see usually the details of who the agent is and how to get in contact with them for questions. Looking at another one, this is one I'm giving as an example as something which the person should make an immediate change to, because this is a not so good one. Same insurance company. This is a Bituach Menalim, also someone who is self-employed, paying 1,500 shekel or so. Is obviously on a direct debit because it's impacted by the CPI, the Madad, because it fluctuates slightly. But they're paying approximately 1,500 shekel regularly into it. We see the opening balance was 29,000 shekel. It made profits of 18,000 because they were in the default mixed fund, which made in 2014 5.56%, made 1,000 shekel. And then you've got fees. They paid more in fees than what they made, 1,900. The cost of disability income in there as well, which is an insurance they wanted, was 1,500 shekel. And the closing balance is 46. But we look at the fee structure, they're paying 8% on the deposit. This was something which we got hold of, and we actually made a lot of changes to, because it wasn't something which was a very old fund which had a very good coefficient. It was a fund that was relatively new, as you can see from the low amount in it, and there was no reason that whoever opened this, they should have been in this high fee fund. So this is an example of someone paying ridiculously high fees. Even though it's the average fee for this type of policy, it should not be being paid. Unfortunately, this person did make changes. Let's look at another example. I'm just going to race through. This is a Bituach Menalim. Again, you see the return here. You see the opening balance, what the profits were, the fees. The fees here are also high, but this is a very old fund. And when we did simulations with this person, it was worthwhile keeping, because even going to something with, let's say, 1% in fees, because they're relatively close to retirement age, and that's why they've gone to a low track. They've gone to what's called Agach ad Chamish, basically they're capping up to 15% in the stock market, because they're getting closer to retirement age, and it's someone who made Aliyah at a relatively late age. And we can see the fixed coefficient is 177. So that was the divisor. It's an old plan. And so when we ran the simulations, so even though this person said, well, I've also got 8% fee, but we said, let's run the simulations. And knowing that they've already got 220,000 shekel here back in 2016, it was still better for them to be in this sort of fund than moving, because they were quite close to retirement age. Looking at another one, this is a Keren Pensia, which a lot of people will often have with young families. And here it's slightly different. Again, we see the return of 11.44%. This person was on maximum fees, 6.5%, until we got our hands on it and we said, listen, you need to change it. And it even tells you what the average in this fund was, 2.2% and 0.2% accordingly. The opening balance was 31,000. They paid in, only paying a couple hundred shekel each month. Again, it's not sma'im. And we see what was taken on for the management fees, 337. But ultimately, here on a Keren Pensia, you see some key things. Because a Keren Pensia has survivor's pension, so we see what the benefits are should things happen. So based on what they've already saved, 36,000 shekel, the predicted future pension until they get to 67, and here it's at 3.74% growth per year, is a future pension of 456. Obviously, this is a person self-employed, earning very little, putting in the legal minimum for their income at 230 shekel or so a month. So obviously their future pension is not going to be so great, but it's going to be almost double, or approximately double what they're putting in will be their future pension. If they were to die before receiving the pension, their spouse would receive 866 shekel for the rest of their life. Children would receive 433 shekel in maximum payout. They've got disability cover of 1,000 shekel a month. So we see a summary here, but the key things, here's where you see the fees, here's where you see the deposits, and here you see what track one's in. Again, another one, this is a Karen Pension with a lower fee, 2%, 0.2%, and it's actually very close to what the average is. And this will see someone who was working as a self-employed and moved to being salaried. And we see the change. And here you'll see what the salary was as a salaried person. So you can check, does that correlate with your pay slip and each month? And did the employer, what they paid into PITSUIM, into the pension, and what the employee had deducted from their salary, does that match? All these are questions which people ask, how do I see it? And here's where you can check. So they were also in an age-related track. That was the return. And we see the similar things. What they would get for disability, 17,000 shekel. What is paid out? Widow's pension, 9,700 shekel if they were to die young, what the surviving spouse would get. If they've got children under 21, what they get. We see a lot of data, and it goes through. This actually goes all the way to December. We see what the salary was and what should be done, and that should be double checked with the pay slip. But ultimately, those are the main things. I guess we'll do one last thing where you can see sometimes they have a big statement where they go into more details. I won't necessarily go too much into it, but you'll see where they list the percentage as well as what the amount one would get in widow's pension. And again, you may get this where you can see how much was paid in by the employee. This was someone with a salary of 10,500 shekel. What was paid in by the employer into PITSUIM and into pension? And again, one can cross-reference with each payslip to make sure, have they paid in what that should have paid in? And this is someone where they're on a lower fee structure. Instead of 6%, they're at 1.8%. Instead of 0.5%, they're at 0.18%. And we see again here what the returns were. They made 6% there as well. But ultimately, if I was to sum things up, and then we'll go into questions. First and foremost, everyone should take ownership and understand the type of plans you have. As hopefully we've seen, I try to keep it as simple as possible without going. Obviously, there's a lot more to go into, but each person has the ability to understand what they have. So I would, I guess, implore everyone here watching this to understand what you have, learn it, check the type of policy, make sure it matches your age. If you're young, don't necessarily be in an overly conservative fund. If you're old or older or closer to retirement, make sure you're not in an overly aggressive fund with a potential risk. Make sure the fund matches your family status and income levels. Do you need disability? Do you need to have protection for your spouse and children if the unforeseen were to occur? Check the investment track that it's appropriate. Check the management fees. Consult with your own agent or licensed professional. This isn't a must, and I would recommend doing this every year or 2 or 3 because things change, just to make sure that you're on top of things. Review it constantly. And if you have the means, not everyone would be saving enough depending on their place of work or their salary. But if you have financial means, consider other options, which you can look at to enhance your future financial situation. There are other products out there. Again, Americans here may have more limitations that people, let's say like Rifka and myself, who don't have a US citizenship, but there are other ways of looking at enhancing. That's the summary, I guess. And also, if you're self-employed, now's to make sure before we get right to the end of the tax year, just double check that you're on track, both for tax purposes and for compliance, to make sure that you are up to speed. I guess we'll open up to questions. People can feel free to reach out privately if they want to, but I guess we should look at the chat. Rifka, if you've got anything to add.
Yeah, Danny, first of all, thank you. Danny, thank you. I think that was extremely well explained. I think people are really leaving with knowledge of where to check the fund, compare them, understanding what they're comparing now. And even if they are then turning back to their, licensed professional, they know what to ask. They're coming from a totally different place. So I really just want to thank you. Second of all, I just want to announce that in 2 weeks, we're doing, not Danny and I'm doing with somebody else, a talk about mortgages. Anyone who's taking a mortgage, very important talk. Details are on the group. And now we'll just look at the questions we got. We got a few questions about Atzmaim, how much they're obliged to contribute, and what if they contributed more than they were allowed. So maybe you could address that.
Okay, so maybe what I'll do, I've actually got on our website, I've got a table of what the minimum is. I don't want to go into too much detail, but in essence, or maybe if
maybe share the link on the chat of the group, and then people can.
Yeah, I'll share the link. I'll share the link. But just very briefly, if someone is earning up to about 63,000 shekel, I'll put the exact figures will be in the link, but up to 63,000 shekel over this tax year, so the rate will be at 4.45% as a minimum. So if we, let's say, take 63,000 shekel, I've got a calculator here, times 4.45%. So it's approximately 290 shekel a month, times by 12. You're looking about, times 12, looking about 2,500 to 3,000 shekel, give or take, is over the year what one needs to put in as a minimum. Obviously, that's not going to give a very high retirement fund, to be able to fall back on a retirement, but that means that's just for compliancy. If someone's earning between 63,000 and let's say and 126,000, again, I've rounded the figures up. The precise figures will be in the link I'll post later on. It's anything in that second band is at 12.55%. Anyone earning more than that, there's no legal minimum requirement. But in essence, if anyone is earning 126,000 shekel or so or more, it's about 900 shekel a month is the legal minimum. Now, there are more you can pay into it. You can pay up to 16.5% of your income, up to a maximum of an annual or a monthly income of, let's say, about 17,600 shekel or so a month. There is a maximum amount. Anything you put on that is tax deductible. It can reduce your taxes. There are minimums, there are maximums. You can put in more. You could put in more. The question is whether or not that's beneficial for you, because there are other vehicles like Keren Hishtalmut, which are short-term tax-free savings, which also have a tax benefit for self-employed people. But I won't go into too much details. I think I guess a lot of people think it's 16%, but it was actually changed a few years ago. I saw there's a comment here. Someone said they were told you could do up to 16%. It used to be 16%, but about 3-4 years ago, it was up to 16.5%. So a lot of people are erroneously just using 16, but it's 16.5%.
There's a question here I really like. Can you choose not to take your pension money and leave it to your heirs?
Good question. So I guess when someone gets close to retirement age, in theory, yes. But what someone should do when they get to their 60s, they should consult, depending on the different type of pension plan that they have. The money is not lost. So if someone, let's say, forgot about a fund and didn't withdraw it, the money doesn't just get lost. Things today, there's so many sites where government sites where you can check. You've got Har Bituach, for example, which doesn't check pensions, but you can also check for a deceased person. Did they have life insurance? Where it should be paying out, or health insurance that there's no need to continue paying for. So you can search things, and because as we've seen with Corona and the ability to take money to get the Pfizer vaccine out quite quickly compared to other countries, was because everything is digitalized. With the Teudat Zahut, it's quite simple once there's the appropriate probate and power of attorneys put in place to be able to find things. But in essence, if someone didn't take money, yes, there would be money available, whether it's as a monthly annuity or lump sum. Again, I wouldn't go into too much detail, but yes, money isn't lost. But if someone's thinking that they don't need it, so I would definitely recommend consulting with your own pension agent, or if you don't have one, with a licensed professional who can look specifically at the plan that one has to see what may be in their best interest to do.
Okay, thank you very much. We're going to wrap up because it's 1 minute to 10, and we said we'd go for an hour. There are a few questions, Danny, that we didn't get to. What's the difference between Pensia Taktivit and Soveret? I think we can go on to Facebook and answer those in writing rather than here. And thank you, everyone, for joining.
Have a good day, everyone.